Good morning and welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us today. Coming up on the show, Bryden Teich, Chief Investment Officer at Avenue Investment Management, will be joining us for the hour. And in 30 minutes, we'll discuss AI's compute shortage with Bhavtosh Vajpayee, Managing Director, Head of Technology Research at CLSA Global Technology. And we want to hear from you this morning on First Call. Reach out with your questions on North American stocks, and Bryden will answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address, firstcall@bellmedia.ca. And now our top line story. The ChatGPT maker OpenAI has confidentially filed for an IPO, signaling plans to tap public markets to fund its next phase of growth. The company is working with Goldman Sachs and Morgan Stanley on a potential listing as soon as the fall, according to people familiar with the matter. For more on this, let's bring in our guest for the hour, Bryden Teich, Chief Investment Officer at Avenue Investment Management. All right, Bryden, always a pleasure to see you. Thanks for joining us.
Great to be with you, Roger. Thanks for having me.
Are they late to the party, or does this matter at this party? Everyone is welcome.
Well, I think it's interesting to have observed like the Anthropic and OpenAI race, and it's sort of been this horse race. I think a lot of this comes down to there's a certain funding cycle for a lot of the private investors that were early investors in both OpenAI and Anthropic. Mm-hmm. And so I think there's sort of this desire between the two of them to come public first. And Anthropic, I think, has filed a week or two ago. So they seem to be
a little bit ahead.
In the pole position. I think the reality is, again, it highlights the market has been strong, but there is sort of a maturation of this AI cycle that is occurring. And the SpaceX IPO, I think, is set to start trading maybe as early as next week or Friday into next week.
Yeah, it opens on Friday.
Yeah, so, and then you've got Anthropic and OpenAI, which are now starting their IPO cycles. And ultimately, the theme that we've been speaking about really the last year and a half is this elevated levels of capital spending has become the theme. Mm-hmm. And these companies' valuation, I think, rise over the last couple of years has been pretty incredible. The question now is, can the bankers get these IPOs over the goal line? Can there be enough liquidity? Does that destabilize the market broadly? Because ultimately, these are huge sums of money that are being raised.
Yeah. I think $80 billion for SpaceX, I believe.
Yeah, around 75, 80 billion. Yeah. I think Anthropic is looking to raise around the same. Google has said that they're going to do 80 billion of equity issuance, essentially. That's a lot of supply hitting the market. And so the question is, can that be absorbed?
Is the money out there?
Is the money out there? Because the money, people that are in that sector are fully invested and have been, pushing their positions. And so it'll be interesting. Like there's a sort of hand-holding that will have to happen in the next month with these IPOs so that the market doesn't just completely sort of derail into this window.
Now, do you think, I'm assuming, do you think SpaceX is going to do what everybody has said it's going to do? It's going to hit a 1.75, 1.8 trillion
I think the
valuation, $80 billion, 75, $80 billion.
I think there's incentives, at somehow, it's like if you think about how they built the CN Tower and the manpower required to lift that. I think every large firm in the financial sector who is participating in this IPO is incentivized to just lift this thing up and up and up, keep it elevated, get it listed at the price that was expected, get it over the goal line, from that perspective. So I think there'll be enough support there probably to get this done. I think it's an interesting window into these IPOs because the IPO game has changed a lot. Like these companies have been attracting investors privately for years. So there are.
We saw the Ontario Teachers Pension Plan with SpaceX. Right?
SpaceX is in every fund, every private fund or any large pool of money, internationally or domestically in North America, like probably has some small sliver of SpaceX. So it's not like a situation where investors are now going to, for the first time, be able to get into SpaceX. Like for the public, that is the case, but there are a lot of private investors that have owned these for years. So it's a different dynamic because you're trying to, you don't want them all to rush and sell at once, and there's a lockup period that I think has been changed. So normally you have an 180 days, 6-month lockup. This is sort of tiered, where if the stock goes up, a certain amount unlocks early. So you're really just giving the private investors liquidity. The question is, can the bankers sort of keep the stock up enough for long enough to make that sort of a seamless process? And that, we'll have to wait and see.
And with OpenAI and Anthropic, do you see them trying to go the same route that Elon Musk? Like he's tried to set his own rules for this, right? He's got the Nasdaq, but the S&P said no. You have to play by our rules. What do you see happening with OpenAI and Anthropic?
I mean, I saw the concerns or the comments that the S&P was maybe going to change their rules. It's great that they said no. As SpaceX can
it's
be,
there for a reason.
If we're going to move to a financial system where the rules get changed, then what's the point? There's very clear profitability rules for the S&P. If you have GAAP profitability, you can be in after a certain period of time. That will happen for SpaceX if it's profitable. The problem is none of these companies are profitable, so then they shouldn't be in the index. But at the same time, it's like the different banks competing to who's going to be the lead on the IPO. Everyone is trying to sweeten the deal to get the largest chunk of the listing. So, the Nasdaq is more flexible because they want the listing. They want it to be in their index. They want that to be the place that people come. Where the S&P, I think it was great to see that they held the ground. And if people want to buy SpaceX, they can buy it. The whole gamification of passive where, we'll put them in the index and everyone has to buy it. That's just kind of a silly game. Yeah. And I think that companies playing that, I don't think is really a great thing. And I'm happy that the S&P kind of held their ground on that.
What kind of an impact do you think it has, all these three big ones on, there's other IPOs coming out this year. I'm not sure which ones, but there's other IPOs coming out. Will they get pushed to the side, do you think? Or is there still interest outside of those?
I think there's, I don't have, I've never been on that side of the business. Other than I can observe, you get windows of time where, God help you if you tried to price an IPO. And then there's windows of time where the market is there, the support is there, and you have to go in those windows. Yeah. We're clearly in a window where, the timing is right for these. The companies have been private for long enough and there's investor liquidity that's needed. So this is where, if you don't go now, you might not get another chance is sort of the signal that I get from what they're all doing this summer.
All right, so it's going to be an interesting summer and fall, though, for sure.
Yeah.
And you think OpenAI and Anthropic, there's still enough interest, still enough money around?
I think that there's I think a lot of people are interested in these names. The problem is, it goes back to you could buy Google if you really like AI. Google's got a great business and they're growing their AI business. You can trade that publicly right now. The problem is both Anthropic and OpenAI are not profitable. What's the goal and timeline to get to profitability? Does it exist? Is this still a bit of a fantasy? That's the question people have to wrestle with.
All right, lots of questions. Well, we got to take a break right now, but up next, the Federal Reserve's meeting will mark a historic shift in leadership. So how will new Chair Kevin Warsh navigate rising rates and stubborn inflation? We'll get more after the break. Let's see how things are shaping up now on the markets. We'll start with the U.S. futures, and it's looking like another positive day for them. Recovery from Friday. The Nasdaq pointing up about 0.8%, and the S&P 500 by 0.4%. A couple of the tech stocks, Marvell, Micron, both moving ahead in pre-markets right now. Marvell at one point was up about 9%. So we'll see what happens for the day with them. Heading to Asia, and the Nikkei recovering. It's up more than 2%. The Hang Seng off slightly by 0.37%. And the tech rebounds what driving the Nikkei. CSI 300 also up 1.87%. Over to Europe now, and a bit of a mix. The FTSE is up by 0.25 point. Down, I should say. The CAC 40 is up by 0.78, and the DAX is up by 0.44. I'm reading those so smoothly today. They're being led. The rebounds, the AI rebounds helping as well. They don't get as hit as hard as everywhere else. Off to the TSX from yesterday. And it bounced back. It was off, though. It was still up for the day, but not as strong as earlier in the morning. Ended up being up by about 0.19% at 34,478. Financials leading the way. Energy as well. Some of the winners and losers from yesterday. Birchcliff Energy up by about 7%. Badger Infrastructure up by 5 3/4. Go Easy off. It's being relegated. And it's up 4.5% yesterday. And Seabridge down by more than 5%. And taking a look at the metals now. Gold up by 0.1 at 43.68, though still down overall over the last little while. Silver as well off, but it's up for the day, but it's off for the last little while. It's up by 0.22 today at 68.74, down below 70. And copper, it's up 1.31%. It's holding nicely at 643. Western Canadian Select yesterday. Concerns over Iran driving it up yesterday, up a little more than 2% at 76.43. And today, what's WTI doing? It's off 2%. Those fears apparently easing. We're hearing from the president talk of a possible deal. And oil's down below 90 and off by about 2%. Well, all eyes are on the Federal Reserve's first meeting under Chair Kevin Warsh as markets gauge how he'll balance elevated inflation, rising rates, and fading expectations for near-term rate cuts. For more, we're joined by Bryden Teich from Avenue Investment Management. Bryden, would you want to be him?
Well, I think he's
stepping into an interesting spot, isn't he?
Yeah, I think he really wanted the job. So I'm sure that comes with some kind of a plan or a vision. That I think, again, the first meeting for a new Fed chair is always interesting. And I think the media journalists that are there have a really good way of sort of probing, where the terrain is on certain topics. I think, the beginning of the year, the idea was that we were having inflation kind of moderate, interest rates were coming down. That was on the back end of the expectation that the Fed would cut rates a couple times. I think that's now all sort of gone out the window with what's happening in the Middle East, oil prices, inflation has sort of firmed. I think it makes it a more challenging backdrop. I think the Fed will remain on a hold pattern. I think the one thing that is interesting and I think should be expected is at some point in the first sort of 6 to 9 months of all Fed chairs, the market will test them in some way. Same happened with Powell in 2018. It happened with Bernanke after he took over from Greenspan. It happened with Janet Yellen as well. Is the market probes the boundaries of what level of communication and sort of
how? Like, what is a probe? What is a
so
test?
it will test the market. The market will say, okay, you say you're going to hold rates. Maybe interest rates sell off, and then he says we'll hold rates, and then interest rates will sell off more. And then he'll say, well, maybe we'll raise rates. And then the market will say, okay, like you're finding that equilibrium balance. It could happen on rates. It could happen. It's most likely to happen on interest rates or equities. It's sort of, I think part of what he's said that he wants to do is get away from the Fed having as large of an active balance sheet and sort of withdrawing some of that liquidity and maybe having the banking sector sort of accommodate for that and with their holding of treasuries going up. Equities have benefited from the Fed liquidity and balance sheet size being what it is. So if it is a situation where he comes out and says he wants to shrink the balance sheet further, I'm sure the market will test that. Say, well, are you going to say that if the market's down 10%? Are you going to say that if the market's down 15%? Like, where is the equilibrium level of, oh, well, we're done shrinking the balance sheet because equities have had enough drawdown, and like there's sort of a flinch moment. So, and it happens all the time with new Fed chairs. I think we had Powell for so long that we've forgotten. But December 2018 was very vivid. He came in, he said, we're going to withdraw liquidity, we're going to shrink the balance sheet. Market went down 15 or 18%. He said, "Oh, we're done shrinking the balance sheet," and so it changed very quickly.
But they must know this too. I mean, Warsh must expect something. I think so.
And he's a very market savvy, market experienced Federal Reserve chair. So he had been in the Fed through the financial crisis, was a very young Fed governor, but he's been an economist working privately or in the private sector. Was famously with Stan Druckenmiller at his Duquesne hedge fund. So he's very financially market aware, but it's going to be interesting having someone who is financially market aware be in this position because there's
especially with Donald Trump over here.
Yeah, there's a certain decorum,
I know it's a committee of 12, but
there's a certain Federal Reserve decorum and process and kind of institutional way that the Fed likes to operate, separate from politics.
And they do seem to maintain it, don't they? Or at least publicly.
They do, and I think it's almost incumbent, or there's a sort of a tradition of Fed chairs being very keyed into the sort of the longevity and the reputation of the institution as being separate and distinct from politics. we're in a age where a lot of that is out the window. But I assume, given that he was picked and nominated by President Trump, he's going to get a lot of pressure. And the question is,
Absolutely.
how does he resolve that and balance it? Because as we highlighted off the top, interest rates are higher, inflation is firming, economy, for a lot of people out there is really wobbling, especially with energy prices being higher. So does that create a challenging backdrop for him?
Well, and it makes it interesting if there's a deal. Trump has said, I mean, it's hard to believe when Trump says how much truth there is to it, but he says, I don't know, it might happen in a few days. We might have a peace agreement. Then we see oil drop, and maybe by September the possibility of a rate cut just before the midterms.
Yeah, I mean, I think maybe. I think the challenge is we've now had 3 or 4 months elevated oil prices. If we go another 2 months, the economic bite is happening now. And I think that the Fed, if they don't cut by September, I don't think they'll cut before the midterm because they want to really be immune from that.
Yeah.
But again, that might change under this kind of political intervention that we're dealing with. But it's going to be interesting because he knows the game, and it'll be interesting to see how someone operates in this sort of environment, knowing the rules like he does.
All right, so not a quiet summer necessarily.
No.
Washington might be hopping. Okay, we got to take a break. Up next, we'll be back with Brian to see why MDA Space is on his radar. Time to see what's on the radar for Brian Teich, Chief Investment Officer at Avenue Investment Management. And showing up first, we have to look up for it, MDA Space. It's a darling. It's doing nicely right now, isn't it?
Yeah.
Took a little bit of had a little bit of pullback, didn't it, the last couple of weeks?
Pulled back in the last week or two. I think it's one that we've owned in our growth portfolios from the beginning of the year. And I think the idea when we started looking at it is we were looking for Canadian businesses that we thought would benefit from higher levels of government spending on defense.
Yeah.
And I think when we read the government release last November, it was pretty clear that the targets for fiscal spending on defense were high. And then we went through our list of what were the companies that we thought could benefit or be well positioned to benefit from that spending. And MDA Space had come up. And we've known the business for a long time. This used to be McDonald Detweiler. Mm-hmm. They did an acquisition in 2017 or 2018 of a business called, I think, Digital Globe. They changed the name, went private, and then it was Republic from a couple of years ago. But again, it's benefited in this last few months with SpaceX IPO, the idea of a space economy, and what certain businesses are in that space and can benefit from this investment. I think why MDA Space I think is interesting. A lot of the space companies or the satellite companies, they're not profitable. They're growing faster than MDA is, but MDA is a existing profitable business. I think that they're going to increasingly be in a good position to win further contracts with the government. Yep. And I think that's something where, when a government sets spending targets on defense, that money will be spent. And if I
was going to say, any concerns that new government,
it's
new goals and stuff?
It's definitely possible that incentive for defense spending changes. At the same time, I think, we've talked about this previously, we're being optimistic in treating the seriousness of sort of this government's fiscal plans. And if you're in a position, if the government has open bids for contracts, there's a certain level of process, professionalization, RFP requests that you have to do. And, there's private companies or smaller companies that can maybe vie for contracts, but MDA Space or a Bombardier or a CAE, they have a government relations team. They know the process. They're able to be there.
They know how to work their way through it.
Work their way through it and provide what the government's asking for. So we like the underlying stability of that business. I think the excitement around growth in space and digital infrastructure in space, I think, is benefiting MDA as well. They did a U.S. listing maybe 2 months ago to sort of try to increase their shareholder base because a lot of these space ETFs and whatnot are in the U.S. and so they're trying to get inclusion to that. So that's all benefiting them. I think it's an interesting way to play both space but also the government defense contract in a very forward-looking way. So
all right, this one, Texas Pacific Land. Am I buying a bridge in Brooklyn?
Yeah, no, this one has a...
There's no Pacific
No,
on
this
the
has
Texas
a
side.
very interesting long history. So and really want to flag this again. This one is in our growth equity portfolio. A colleague and I went down to, they had an investor day maybe 3 weeks ago in Midland, Texas. So but really...
How interesting is Midland?
Have you been?
No, I've never been. I watched Landman, so I'm totally curious.
It's kind of like that. Like it's...
it really is, eh?
Yeah, I'll reserve my comments for off air, or off the camera. But they did a really great job of highlighting their water infrastructure business. I think so. The history of Texas Pacific Land is very interesting. It was essentially the Texas Pacific Railroad in the 1850s. They ran railroad track across the country.
Yep.
In the 1880s, it went bankrupt. But the bondholders for the Texas Pacific Railway essentially got this land grant that was then publicly listed as a trust. So it's been on the New York Exchange since the 1800s.
Oh, wow.
But they owned 800,000 acres of land in Texas, and then nothing happened for 60 years or 40 years, and then all of a sudden, obviously, the Permian Basin
came about. Yeah.
And it's like they owned all the land. So it was an oil and gas royalty for a long time. But I think the thing that's changed in the last decade is the growth in their water business and the water infrastructure business because of how much water is produced out of the Permian, how much water has to go down the frack well. So they're in a really good land position to be able to benefit from that. And it's a really sort of unique, interesting oil and gas royalty business for those reasons.
And not worried about fights over the water? I mean, that's becoming a huge issue.
Yeah, so it is, but they're in jurisdictionally where they are is really to their advantage. They're looking at ways to sort of be able to desalinate, reuse water, even in farming potential. Like they took us through their R&D facility where they're testing out growing plants and stuff with the water. So there is that. Like there's so much water that exists underneath the ground in Texas. There's nothing
the Ogallala Aquifer, if I'm not mistaken,
there's nothing
right?
at the surface level.
No.
So, but when you produce all this 6 million barrels a day of oil in the Permian, it produces 20 million barrels of water a day. That water needs to be handled, processed, and
used somewhere.
So they're trying to figure out the best use case to that. And they owned all of that land space that is able to do it. So it's a really unique, interesting business, and they're very forward looking in that water business. But that was, the recent trip down there was the reason to highlight that.
All right, you're going to tell me off air about it. Still ahead, what are the consequences of AI's computer shortage? Yeah, we'll explore that with our next guest. And our phone lines will open soon for our first call segment. Reach out at 1-855-326-6266. You can also send us an email, firstcall@bellmedia.ca. Oil prices are down this morning as U.S. President Donald Trump says that a deal to end the war in Iran could be reached in 2 or 3 days. You can see it's up by about 1.86%. He says the Strait of Hormuz would reopen immediately after. This comes after Iran and Israel traded strikes over the weekend for the first time since April. Trump says the blockade of Iranian ports on the Gulf of Oman will not be lifted until a final deal is reached. Cineplex says it had its highest May box office since 2019, earning more than $60 million. The company credits a diverse film slate that drove audience engagement, especially among younger moviegoers. This includes movies like The Devil Wears Prada 2 and Michael. It says Michael is the highest grossing music biopic of all time, surpassing $300 million at the box office. OpenAI says it has confidentially filed for an IPO 1 week after its competitor, Anthropic, announced its plans to go market. The ChatGPT parent says it hasn't decided on the timing and cautions it may be a while. It says some plans are easier to pursue as a private company. A new report is exploring the unintended consequences of AI's compute shortage, what it's calling a butterfly effect. We'll explore what that means for the future of investing in AI. Here to discuss this and more is Bhavtosh Vajpayee, Managing Director and Head of Technology Research at CLSA Global Technology. Bhavtosh, thank you very much for joining us today.
Good morning, guys.
What kind of a shortage are we looking at when it comes to the computing?
Well, the shortage has to be estimated. There is no single number, but we think it's 70%. So if you look at demand divided by supply, that's 1.7 currently. It should stay at 1.3, 1.4 next year as well. So this is not a short-term problem. This is at least a 2-year problem.
And what does this mean then for AI, moving AI forward, especially with all the CapEx we've seen?
Well, AI optimists are in a joyous mood. This suggests that adoption is very strong. The growth of token demand is much faster than expected. So those are the good things. The not so good things are the rising cost of compute, which is rising very fast. Tokens grew about 20 or 30% month on month in March. We are seeing 20% increases in rental prices, not just for the latest GPUs, NVIDIA Blackwells, but also for the older ones like Hoppers. This is going to have, as we call it, unintended consequences on a number of things. So, for example, we have started hearing of the rationing of tokens, the withdrawal of AI privileges for employees, and things like that. It could also lead to worsening losses for AI startups. Over the next few months, it could lead to a slowdown in enterprise adoption. So not everything is good.
Hi, Bhavtosh. Thanks for joining us this morning. On this topic of tokens, I'm wondering if you could, for our audience at home, just simplify and explain what the token jam there is right now. Essentially, from our understanding, is that whenever you put a request into one of these LLMs, there's a certain required amount of token, almost energy usage, if you want to call it that, to generate the response. And obviously, the more complex the request, the more tokens are needed. And so would that be a fair way to characterize it, or was there anything you would add to that for our audience at home?
Sure. So this is all about uptake and adoption. We have hundreds of millions of people exploring AI for the first time. Their intensity of usage is also increasing. We all started as experimenters and explorers. We asked a few questions. We were delighted with the answers. Now the frontier explorers are creating agents of their own. And therefore, the usage of tokens, which is simply one unit of compute in the AI world, could be a word that is part of the question that you ask AI. That's exploding. And we are talking of quadrillions here, where a quadrillion is 1,000 trillion. So quadrillions per month is how it is measured. But tokens have to be processed by chips, and chips have to be produced somewhere, and most of that is produced by TSMC. Our estimation suggests that chip production is increasing. Last year, it was about 7 million chips. This year will grow to about 12 or 13 million chips. But the growth of production and the growth of compute supply, even though the new chips are faster, is well behind the growth of demand. And that's a problem that will not go away because we are dealing with a physical issue here. Semiconductor plants have to be created, machines have to be set up. It takes time. And that time, in our estimation, is at least the next 2 years, if not slightly more.
And I have to ask, you mentioned that Uber is playing a role in this?
Well, Uber was quoted in the media saying that their annual AI budget was exhausted by April. Apparently, their 5,000 or so engineers used so much AI that they ran out of their token budget. So that was well quoted in the media, but there have been other instances too. And frankly, if you just look at the math, we are not seeing token costs or the compute costs go down as yet because it's taking time for the latest and greatest GPUs and ASICs to be produced, to be installed. And as a result, there is increasing demand for the same infrastructure, which leaves just one variable called pricing. And pricing has started to go up. Normally in technology, everything gets cheaper. And AI compute will also get cheaper in the next few years, but not immediately.
So on that note, exactly, I think that's a great segment to ask another question on this. But so essentially, you're saying demand has risen so quickly, the supply of chips and semiconductor plants is not reaching it. So that would lead to the conclusion that should these AI companies like OpenAI or Anthropic just be significantly raising prices to figure out where that equilibrium demand is. And maybe it's, for a large corporate Fortune 500 company, maybe your AI budget has to double or triple to meet that supply. And I think, are we in the early stages of that, that supply-demand balance being figured out through pricing?
Yeah, you gave two amazing solutions. I'll add a third. I think it's time for AI workloads to splinter and to go where they belong. Not every AI workload is so complex to be put on the GPT 5.5 or the Claude Opus 4.8 latest models. There are many workloads like summarization of emails, a summary of calls like this that can be, put on older models, and those older models need to be cheaper, much cheaper. There are a number of open source models, especially from the Chinese LLMs that we have tested. They are almost as accurate. Some of them have higher latency. They take a few more seconds to provide the answer, but their pricing is fractional compared to the frontier LLMs in the West. So we are heading into a summer where there will be changes in how workloads are allocated to the latest and greatest models, the older models, the budget models, and the Chinese open source models. And by the time summer is over, we'll probably be in a very different scenario of which model is processing which kind of workload. And that's one way to reduce this cost inflation.
And I just want to ask, what kind of an impact does this have? We have 3 massive IPOs coming up. What kind of an impact does it have on those 3?
Well, in this case, the focus should be on the 2 big IPOs, Anthropic and OpenAI, that directly relate to AI. And if you have to interpret it positively, there's massive demand, and the growth of revenues of Anthropic has been well quoted. So that's amazing. The darker side of this is that we are headed into a period of confusion, potential slowdown in token growth because there's no oxygen in the room. The cost inflation is so high that uptake of AI kind of slows or stalls in the summer. And these are not good things ahead of big IPOs. At the same time, there could be pressure across the food chain to solve the problem, as you said. So how will the problem be solved? Maybe Anthropic and OpenAI need to cut prices for at least for their older models to make sure that they don't lose market share to open source models from China. And how will that cut in pricing impact the profitability that they present to investors during their IPO meetings is going to be interesting. So I think not everything is in equilibrium, and in fact, we are heading into a disturbance in the equilibrium as this crunch continues.
Okay, we have to wrap it up there, Bhavtosh, but thank you very much for joining us.
Thank you for having me.
Bhavtosh Bajpayee is Managing Director and Head of Technology Research at CLSA Global Technology. Up next, can Canadian industrial chemicals company Chemtrade gain from the surge in demand for semiconductors? Our conversation with the CEO when we come back. And of course, our phone lines are open. Bryden Teich is taking your questions on North American stocks. Reach out at 1-855-326-6266 or email us first call at bellmedia.ca. Chemtrade Logistics, the Canadian industrial chemicals company, is a leading supplier to global makers of advanced semiconductor nodes. It also supplies water treatment chemicals to more than 1,000 cities across Canada and the U.S. and expects these segments to be key drivers for future growth. We sat down earlier with Scott Rook, President and CEO of Chemtrade.
We have recently upgraded our quality levels at 2 out of our 3 ultra-pure acid plants in the U.S., and we have been ramping up those assets, and we are currently selling our ultra-pure acid to 2 of the chip producers, and we're working with all of those. So we are seeing a significant uptick in demand, and I think over the next 2 years we'll see even more rapid increase in demand as we sell out our new capacity.
Can you explain to us what it's used for?
Yeah, sure. So the final step of chip production, the fabs basically wipe off the computer chip with ultra-pure sulfuric acid, and that removes all of the impurities. And so right before it gets packaged and then shipped to their customers, they wipe it clean with ultra-pure sulfuric acid.
Interesting. Okay. Water treatment solutions, also part of your business, about 30% is what I understand. What's driving demand for this segment?
So what's driving demand for that? Well, I'll say over the past 5 years, we have more than tripled the size of our water treatment business. We've done that by adding capacity of new products, working on reliability and efficiency. We've also made acquisitions in this business. But as we look forward and think about growth in the business, tighter regulations across the market is driving growth. We'll see oil and gas has greater demand for water treatment, the poultry market, and also data centers. Those are all industries that are demanding more water treatment chemicals.
Okay, what are the other products that your company produces?
Yeah, so in addition to that, we make sulfuric acid, and we supply that to the gasoline industry, to oil and gas. We also make a group of products out of a plant, caustic soda, chlorine, hydrochloric acid, and we sell that into Canadian pulp and paper, water treatment, and then the fracking industry. And then finally, we make a product called sodium chlorate, and that is a bleach that gets sold to the pulp and paper industry.
So, Scott, because of the Middle East conflict and the fact that you make something that is added to fuel, has that part of your business dropped?
So that we are expecting that the conflict in Iran, as bad as this may sound, that could be an advantage for us. And so here I'll tell you why. In our electric chem business, 70% of our variable cost to produce our products is tied to electricity. And our plants for our electric chem products sit in Canada. And so our electricity is Canadian hydroelectric power. And so we compete with companies both in North America and with companies in Asia, and their electricity is a mix of natural gas and others. And so as natural gas prices go up and energy prices go up around the world, I think I like our position with Canadian hydroelectric power.
Interesting. Okay. I also know that net earnings were down $23.7 million in your last year. Why is that?
We have a turnaround. So basically, our largest plant takes a turnaround every other year, and so that's the number one reason for that our earnings have been off a bit. But if you look out over the past 5 years, we've had significant increase.
Interesting. Okay, let's talk about what's going on in BC. You've applied for rezoning for operations you have in North Vancouver, but that was rejected. What did you ask for, and then what is Plan B for you?
Well, so the Plan B, after the District of North Vancouver voted back in April, they did vote no. We went back to the table with the district members, and through negotiations, we made some modifications to our proposal.
What did you ask for, Scott?
The mayor supported us, and then they voted. They recently voted 5-2 to reconsider our proposals, and then and that is moving to the next step, which is going to be next week on June 16th. That there will be more public hearings.
Can you outline what the request was for?
So the changes that we made were primarily tied into basically the issue of perpetuity, which is what the mayor had addressed. Our previous proposal was going to give us, if we made safety upgrades at the site, then we were going to have approval from the district to operate and produce chlorine at that site in perpetuity. And so probably the biggest change that we made was tying that more in line with the length of our next lease agreement with the Port Authority.
Scott Rook, President and CEO of Chemtrade. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including a call for a higher price target for TFI International. Let's take a look at some of the notable analyst calls and recommendations. BMO Capital Markets raising the price target for TFI International to 170 from 140, citing strong demand and improving cyclical conditions, especially in specialized and flatbed. However, much of this improvement is already reflected in current valuations across the company's key segments. While less than truckload freight shipping offers potential upside, more consistent evidence of lasting service and pricing improvement is needed, they say. Bank of America raising its price target on Oracle to $240 US from $200, keeping a buy rating ahead of the company's fiscal Q4 results June 10th. The firm says demand remains strong in both cloud infrastructure and database businesses. Key focus areas include data center expansion, revenue timing, spending and financing needs, and continued strength in the core business. Morgan Stanley has raised its price target on Apple to $360 US and kept an overweight rating. The analyst saying Apple made clear progress on its AI plans at WWDC and could make money from AI sooner than expected. However, the improvements will take time and progress will be gradual. For more, let's bring in Bryden Teich, Chief Investment Officer at Avenue Investment Management, talk a little bit more about that. Apple, does it seem like it's going in the right direction? I mean, it's had a great year, but it feels like with the AI, they took a lot of heat.
Yeah, I think they took heat for sort of sidestepping the first phase of AI. And I think it was, I think it reflects Tim Cook's leadership of essentially they know what their core business is. They're I think the tariff situation was a big concern for them and managing through that. There was enough meat on that bone. And they've sort of sidestepped the AI. And ultimately, the way I've heard what Apple's going to be doing on AI explained best is essentially most of us will access AI through Apple. Through our phone.
Of course. And so, can't be surprised by that. That's how Apple operates.
Yeah, and so can they figure out an ecosystem way to layer that in and to help in the productivity for individuals? I think that's the way they're doing it, and it's to their benefit in that they're not having to make these large capital investments that the other companies are having to make. All
right, I'm going to go to another break. When we come back, Ryan will take your questions on First Call. Stick around. All right, time for First Call and first email. And the first one is from Paul. If you held ARC shares, would you take the offer from Shell, 3/4 Shell shares, 1/4 cash, or would you sell ARC as it closes in on the $32.80 offer from Shell and use those funds to buy Canadian oil and gas co's?
So thanks for the question, Paul. It's a very good question. I think the way I would think about this is essentially if you were owning ARC because of their asset base and the Canadian exposure, obviously that's benefited from the acquisition from Shell. Like the way I would replace ARC in a portfolio, or the way we would do that, is by switching it out for tourmaline, which we think is of equal high quality, and it gives us that specific Canadian exposure that we want for our gas names. I think that Shell's a great business, but you're buying a major integrated business.
Big fella now.
It's a big, you could own Shell, you could own Exxon as just sort of large integrated oil and gas producers. Tourmaline, I think, in a higher gas price scenario, I think would benefit really well. I think ARC was a great business, and it does feel like, in some ways, Shell's kind of stealing it away. This is a very long life asset. Obviously, it's been, there's years where the Canadian energy gas price is lower. So, but ARC and Tourmaline have both done a good job to diversify. The golden egg is, can we get large scale export capacity from the West Coast? And then it would give us more exposure to the international pricing. But for the specific question from Paul, I would look at maybe switching it out for Tourmaline would be a way to play that.
Okay. Next email is from John. What's going on at Shopify? Is it a good entry point?
Thanks, John, for the question. So I think Shopify has taken a little bit of a break. It had a good couple of years after recovering from 2021 and 2022 top. But I think the challenge we've always had on Shopify is just the valuation is very high. I think that they're in a better spot than some of the other maybe AI tech companies that have large scale capital spending. There's definitely Shopify has done a great job of embedding themselves in the e-commerce ecosystem. I think their app has become increasingly useful and effective, even to be managing Amazon deliveries, and they're really almost creating a payments rail space in the Canadian e-commerce space. The challenge is the valuation's high, so there's not much room to err when you're trading at a multiple of cash flow or EBITDA like this. It's not one that we own for those reasons. There's other things we'd rather own. So we would, the break in the shares aside, we would not be looking at a name like Shopify right now.
Okay, we've been talking about this one. This is from Roberta. Would you be a buyer of SpaceX now, or would you wait for a couple of weeks?
Thanks, Roberta, for the question on SpaceX. I think it's best to see how this plays out and being patient. I think that there's a scenario. The best case scenario is that this goes okay. Like there's not. I don't think there's going to be a large pop, push higher. I just think the weight of the size of this is just too big. The scenario is that it doesn't go well, that a bunch of prime brokers and the banks get hung with this for a month. Everyone else has to sell their other tech stocks to kind of satisfy their SpaceX needs.
Yep.
So I think that favors being patient, and there will be some period of digestion. There are a lot of sellers of this, so there's the retail that they're trying to bring in to buy, but there are going to be a lot of institutional sellers over the next several months. I think that time will give you a better opportunity than in the next 2 weeks.
And the fact he's pushing so much and trying to change the rules and push the rules on it.
Yeah.
Maybe you sit and wonder and go, whoa.
He's a rule breaker.
Is that just or is he just being Elon?
The bull case on it is that he's a rule breaker and everything he does always works. And the other side is that you find out where the rules are, you break the rules, and then you get the government to kind of backstop you. But anyway, that's for another time.
We'll wait and see. Bryden, thanks as always for joining us. Always a pleasure, sir. That's it for us here on The Street again. Thanks to Bryden Tice, Chief Investment Officer at Avenue Investment Management, for joining us. The Open is up next. Trading gets underway 30 minutes from now. Have yourself a great day.